What's up, everyone? Today, we're breaking down 7 compelling reasons why now is the time to load up on shares of the Dividend Growth King SCHD before 2024. SCHD has been an absolute monster, even during 2022's wild market, but many investors are still sleeping on this ETF's incredible strength. In this video, we'll walk through why SCHD needs to be a core part of your portfolio, especially in today's valuations. You absolutely do not want to miss this opportunity to secure a 4% dividend yield and double-digit dividend growth for decades to come. Make sure to stick around to the end because reason number 7 for buying SCHD will shock you. Reason number 1. Lock in a nearly 4% dividend yield. First up, SCHD offers an incredibly juicy dividend yield of almost 4% at current prices. In this low-yielding world, a 4% yield is an absolute gift from the market. But this isn't some risky high-yield trap. SCHD focuses purely on high-quality dividend players with strong balance sheets. The ETF screens for stocks with at least 10 consecutive years of dividend increases. The rigorous selection process results in an all-star portfolio of dividend aristocrats and kings with rock-solid payouts. SCHD's holdings have weathered recessions, wars, inflation, you name it. So by scooping up SCHD today, you can lock in an enviably high yield on a very low risk, established dividend player built to thrive for decades to come. Reason number 2, dividend growth beats inflation. But it's not just the high starting yield that makes SCHD so appealing. It's the double-digit dividend growth that you can expect each and every year. SCHD's dividend has growth of an 11.5% annualized rate over the past 5 years. With the inflation rate over 8%, SCHD's dividend growth has an absolute trouncing rising price. This means that your real income continues surging higher even in an inflationary environment. SCHD achieves this through its stringent selection process of only battle-tested dividend growers. Companies like Texas Instruments, AbbVie, and PepsiCo have grown their dividends for 25 plus consecutive years. They have pricing power to keep up with inflation and proven commitment to rewarding shareholders. Reason number 3, monthly dividends add up quickly. Now, here's a little bonus fact about SCHD that not enough investors realize. It pays dividends monthly rather than quarterly. This means that you get 12 dividend checks per year rather than just 4. This consistent drip of income allows you to compound gains faster. It's like getting an extra 8 dividend checks per year compared to traditional quarterly payers. Those small monthly sums add up quickly. If you invested $100,000 into SCHD today, yielding around 4%, you can earn over $3,300 in year 1 from monthly payouts. That steady stream of cash flow can cover bills, get reinvested, or be used to splurge on a nice vacation every year. Reason number 4, outperformance with lower volatility. SCHD doesn't just provide a solid dividend, it's an absolute beast when it comes to total returns as well. Since inception in 2011, SCHD has gained over 190% compared to just 120% for the S&P 500. And it's managed to outperform while being significantly less volatile than the broader market. SCHD's 5-year beta is only 0.78, meaning it moves much less dramatically than the S&P 500 in response to market swings. This combination of higher returns with lower volatility is incredibly rare and desirable for any long-term investor. SCHD provides the growth needed to beat inflation while smoothing out the market bumps along the way. Reason number 5, top-notch portfolio of 100 stocks. SCHD holds 100 of the highest quality dividend stocks out there, providing instant diversification. Top holdings like Microsoft, Johnson & Johnson, and Home Depot are titans with staying power that will thrive for decades to come. I love SCHD's portfolio because you get exposure to recession-resistant sectors like consumer staples, healthcare, and utilities. These stocks provide stability when times get tough. But you also get upside from sectors like technology and discretionary that drive growth in a thriving economy. SCHD strikes the perfect balance, giving you the best of both worlds in one convenient package. Reason number 6, rock bottom fees. SCHD is one of the cheapest ETFs out there with an expense ratio of just 0.06%. That means SCHD takes only 6 cents annually for every $100 invested. Comparable dividend ETFs often charge 5 to 10 times higher fees. Over long holding periods, high fees can sap thousands in return. But with SCHD, more of your capital stays invested and continues compounding rather than getting eaten up by market expenses. Reason number 7, upside from interest rate cuts. Now, this last reason to buy SCHD before 2024 is a bit counterintuitive. Conventional wisdom says rate hikes are bad for stocks, but the opposite is true when rates get cut. The Fed is aggressively hiking rates in 2022 to fight inflation. But historically, inflation is quelled after about 18 months of hikes. Once prices stabilize, the Fed cuts rates to support the economy again. I predict 2024 will be a year of rate cuts and easing. And SCHD in particular will benefit massively. Lower rates boost the present value of future dividend streams. Plus, dividend payers look far more attractive when rates decline. So buying SCHD now allows you to front-run the upscale when the hiking cycle ends and cuts begin. Get in early before the herd bids up SCHD's price. There you have it, my friends. 7 rock-solid reasons why SCHD needs to become a cornerstone holding in your portfolio today. I hope now you see why I'm so incredibly bullish on this ETF heading into 2024 and beyond. Now, to quickly recap, you get an incredibly juicy, near 4% dividend yield on battle-tested dividend aristocrats and kings with double-digit dividend growth. SCHD pays out monthly for faster compounding. It offers higher total returns with lower volatility, a combo that's unheard of. You instantly diversify across 100 of the highest quality dividend growers in sectors resistant to economic swings. And it's all packaged in a convenient ETF with expense ratio of just 0.06%, an incredible value. But it's reason number 7 that really seals the deal for me. Being positioned in SCHD before the Fed's hiking cycle ends will allow us to ride the wave of upsides when rates get cut again. Dividend payers like SCHD holdings benefit immensely from lower rates. Now is the critical time to start building your position. Take advantage of the gift SCHD is offering with its discounted share prices today. Lock in that 4% yield and double-digit dividend growth for decades to come. Then watch as your monthly SCHD dividends become an absolute massive pile of passive income. We're talking $10,000, $20,000, even $30,000 plus per year in dividends alone. Add it up after 5, 10, 20 years of compounding, and we're talking serious money. The lucky investors who hop on the SCHD train today will look back years from now with joy at the fortune this one simple decision will have made for them. Don't miss this limited time opportunity to change your financial future forever. Start with a starter position if needed, but commit to building SCHD into a significant chunk of your portfolio today. I promise you will not regret it. Your 85-year-old self will be sending your 2023 self a big thank you note down the road. As always, please hit like on that video if you found this helpful, and consider subscribing for more content on how to build passive income streams that can fund the lifestyle of your dreams. Let me know in the comments which reason for buying SCHD resonates with you the most. I appreciate you watching all the way to the end. Now, go out there and start executing on these strategies to secure your financial freedom. SCHD and dividend investing will change your life. I'll see you in the next video.